Today I'm going to talk about something that I think differentiates a lot of successful traders from unsuccessful, unprofitable traders. Now, what I'm going to be telling you today doesn't necessarily mean that you will be profitable, right? Trading is a skill that you make over time, and there's no way to just instantly become profitable. Even though I know some people are going to sell you courses, this is a piece of information that will help you on the road to becoming profitable, but there still are other steps that you need to take in order to get there. Now, what I'm going to be talking about today is trend trading. Now, before I get into this video, make sure to like and subscribe if you'd like to see more content like this. And I would also like to say that I'm not a financial advisor, so I recommend you do your own research before entering in any positions. And I would also like to thank our sponsor, Crypto.com. They did recently come out with a credit card in the US, so make sure to reserve yours today. But anyways, let's get right into the video. So what is trend trading and why is it something that a lot of traders don't do? It all starts from when traders initially get into the market. And this is something that pretty much everyone is guilty of. I can personally say for me, whenever I first got into trading, I already had this mindset, and I think a lot of other people do as well. And what is that mindset? The mindset is that traders are supposed to predict the top and bottom of moves. Now, this is something that, in my opinion, is the root of the problem, the reason why so many people are unprofitable. So, for example, if you ask someone on the street, what do they think a trader does? Where would they buy and sell in the market? They would probably say something like this. They would say they buy right at the bottom, so they buy right here, and then they sell right at the top right here. So they get perfect trades every single time. That's their job. They try to buy and sell right at the top and bottom. And another place that comes from is if you ask someone, should I buy this stock that went up 30% yesterday? They would probably say no, and you'd ask them why. And it's like, well, because it's gone up so much, it's going to go down. And so basically that's where the root of this problem comes from. What trend trading does is trend trading takes advantage of a trend once it has already been started. So the whole idea of this is that in trading, what a lot of people don't understand is that the win ratio and consistency of your trades is the most important thing, right? I don't care if you're making 100% profit in one trade or 2% profit in one trade. If you can make 100% profit 1 out of 200 times, you're not going to be profitable. But if you can make 2%, 1 every 3 times with a 0.5% loss each time, then you are going to be profitable. So it all depends like that. And then of course you can use leverage to multiply your gains, etc. However, that all comes down the line. So how does trend trading work? Let me show you a few examples and then also explain to you how it is an advantage to the trader. So as I was mentioning before, the win ratio. So the whole idea of the win ratio with trend trading is that trend trading is more consistent than predicting the top and bottom of a move. So the whole idea of that is that it's going to be much, much easier for me to predict that the market is going to keep going up right here than it will be to say that the market is going to keep going up right here. Because maybe if I was looking for the bottom, maybe I would say, oh, well, this is the bottom, this is the bottom, this is the bottom. And you know, I would have just made a bunch of bad trades, and then maybe I would have finally caught the bottom, but I would have already lost so much money. So the whole idea is that it's much easier and much more profitable and consistent for me to say that this is going to keep going up rather than saying that this is going to be the exact bottom of the market. So that is one of the key reasons that trend traders do what they do in order to make more consistently profitable trades. So let me show you an example of a trend trade that you could have made here on gold. So gold had a large breakout recently. I think it was something like 10% breakout in a couple of days. And so that was huge. And a lot of people obviously wanted to have trade that. And I think that this is actually a perfect example of trend trading. So first, let's look at the long term here on gold. You can see that already gold on the long term is in an uptrend. So we have a nice little uptrend here. We have higher lows. So it's very, very clearly in an uptrend. So whenever you see an uptrend like this, you should already be thinking, okay, I only should look for places to long. I think shorting in any long-term uptrending market is always a risk. I know you can say, okay, right here there's a resistance, and maybe I would have shorted right here at the top of this move, but I still think that shorting at the top of this move is higher risk than longing right here after it bounces off of a support. So that is the theory behind trading. Although obviously, once you become a trader and as you become more experienced, you can decide to change that. Maybe you do want to short from the top because there's resistance, but generally the whole idea of this is that in an uptrend, you only want to be longing. Just in case, if there is a breakout, then you will catch that move instead of risking your money against it. So we are in a long-term uptrend. That is one thing that we are currently in here on gold. Already, you should be looking for a long entry. And I'm going to assume that you're not a perfect trader. You see that it forms this low right here and you completely missed it. I think most traders probably would have missed that. It's very risky, especially on Forex, to find the lows of moves. So you probably missed it. And then now this is going to be a point where I would have entered, and I'm going to explain to you why. What happened here on gold is that we formed this low to form the even longer term uptrend. So we had two higher lows confirming the uptrend. So you missed this trade on the uptrend. However, now you know for sure it's confirmed that there's an uptrend. You see this wedge forming right here, right? This is going to be another higher low. So this would be a second uptrend. And if you would have seen this before, it could have helped you predict the move. But once again, I'm just going to assume you didn't see this. You could have said, well, down here, you can see that it touched this point specifically around 3 times. You can see it touched there, touched there, touched there on this trend line. And then it actually ended up holding this trend line once again right here. But assuming you didn't see that, you could have seen this wedge right here, which is super, super clear. You see 2 hits on the support of this wedge, this line down here, and 2 or 3 hits on this upper trend line right here. So what I would have been seeing is we are clearly in an uptrend. I want to enter in on a long. Now I see this bullish wedge on a correction from one of the initial moves on the uptrend. And so where I would have tried to enter is on the breakout of this move. Now, why is that? There are multiple reasons for this. One, we are going to see an increase in volume at this level right here at the breakout because there are naturally going to be traders that see this and then want to buy in order to catch the move. So one, we're going to have natural volume from traders entering in on the position, playing the breakout. Two, we are already in a longer term uptrend, so the market is trending and has a higher chance of continuing to go up than reverse and form another low. So there are pretty much a bunch of reasons in your favor to enter this trade, and so that's why I would have entered this trade. And then obviously, once you enter a trade, it's always up to the market to decide how it's going to play out. You always have to have a plan. You have to have a stop loss. So if I were trading this position right now, I would have had a stop loss right below this low. So I would have had it right here, just to have a little bit of wiggle room. So I would have had a stop loss here, and then I would have opened my position right at the breakout, and then it ended up going up and I would have made profit. So the entire idea of this is that I have the highest chance possible that we are going to make profit on this trade. And I ended up doing so by having multiple factors in my favor in order to continue the uptrend and trade the trend instead of trying to predict where it's going to change or start going down or try to find the bottom or the top of a move. This is how I traded the market. Now, let me explain to you a few of the benefits to this, because there are more benefits than just being a better trader and being a more consistent trader. The other benefits, and one that you would have seen on this trade, because obviously on every single trade like this, you're not going to see 10% profit on any trade like this. This is something that is really only happens maybe once a month, maybe once a year, depends on how you trade. But this only happens every once in a while. But this is one of the benefits to trend trading. If you're a trend trader and you're playing the continuations of trends, then if the market, for some reason, forms a much larger breakout or has some sort of amazing news in the market and you end up catching the trend as this amazing breakout happens, then you are going to be open to a lot more of these larger moves. You're not going to be trying to predict the bottom and then just closing the second it goes up. What's happening here is, since your stop loss is all the way down here, obviously you can adjust that as the trade moves, but since your stop loss is all the way down here, you have a lot of room for growth. So if the market, for some reason, like there's an announcement that, okay, Bitcoin is now accepted on Amazon and you have an uptrend trade, then you would have made, your trade would have been open for this entire breakout of profit. You would have made this entire 10%. And that's one of the amazing benefits of this. And this is especially apparent on very volatile trading pairs such as cryptocurrency altcoins, as altcoins have absolutely humongous breakouts. So if you are in a trade like this and the trend never changes, then there's no reason to ever close your trade because you got in at such a good position, and since you're trend trading, there's no reason to close it. So that is one of the amazing benefits to this. Now, let me give you a few more examples of trend trading, as I know everyone's just going to say, well, this is just one example, so let me show you a few more. And this one's going to be on Bitcoin, but as I showed before, this works on Forex, this works on Bitcoin, this works on anything. So on Bitcoin here, one trade that I personally made, and I would actually say this is fairly similar to gold, is an uptrending trade as the market formed a low. Here we are on Bitcoin, we hit the high of $14,000, and then I'm looking for an entry. I want to try to trade this move after it corrects and when it bounces up, because I know that on the long term on Bitcoin, we are in an uptrend. That's very apparent. If I look at Bitcoin in the very, very long term, we are hitting higher lows, and I know that we're going to form another higher low soon. So I see that we have a high at 14,000 and then we dip all the way down to 10,000. So I assume at this point, after we've dipped to 10,000 and we're starting to go back up, that we are now in an uptrend. So I draw my trend line. I have this trend line right here. And now I know that we are in an uptrend and I'm looking for an entry. Now, once I have identified that we are now in another uptrend, we have another higher low, we haven't broken this uptrend yet, then I see on the shorter term that we have a wedge here on Bitcoin that I would say maybe some people didn't see. So we have this right here where we have a high and then a lower high. And so we are consolidating into this wedge on the shorter term. And so what I'm seeing here is that now that we have formed a bottom, we have formed another low on the uptrend. Now that we have this resistance right here moving downwards, so the resistance is getting pushed downwards, I think that we're going to have another breakout. And another pattern that some people would call this is a head and shoulders. So you can see that we formed this pattern right here with the low, and then we eventually broke out. So that is something that I personally saw on Bitcoin. I knew that if we were to break this little trend here of lower highs, then we were going to continue the uptrend from this low at $10,000. So I was able to open a trade right here at the breakout. This is very similar to gold. And I think this is a great example because it's not as an amazing trade as you could have made on gold. You're not going to get one of those crazy gold trades every time. You're not going to make 10% profit every single time. But if you would have entered right here, you would have had a very, very similar trade as you would have had on gold. And then you would have made, a little bit of profit here. You would have made actually 11% profit, which is more than gold. But I would have assumed that you were trading gold with leverage, but you still would have made quite a bit of profit. And obviously here, I'm only talking about the entry strategy. For exiting a trade, a lot of people have a variety of different strategies to exit a trade. I'm only talking about an entry, and then exiting is for you to determine. Personally, I saw that I was close to my target at $13,000, and I closed my trade around $13,000. However, it can all depend on how someone trades. Maybe they would have closed it right up here, but if you were looking at the short term, you could have seen this little trend right here, and then you maybe would have closed it at 12,600. So there are a bunch of different ways you could have closed this trade, but I was able to make profit by trend trading on Bitcoin in this move. Now, one final example I want to show you is on altcoins. Now, as I mentioned before, if you were previously trading the trend down here, as you can see, it never broke the downtrend, then actually never broke the uptrend, then actually all the way up here. So it took quite a while for this coin to break the uptrend, so you could have made quite a bit of profit. However, assuming you didn't even enter all the way up here, obviously we're in an uptrend, and then as we do form these new lows, so we formed a low here, then you could have tried to trade that as well. So There are tons of situations for when you can trend trade. I explained a few of the benefits in this video, but I'm just going to tell you a few more right now. So another one is that you are making less risky trades. Since you're not trying to find the bottom of a move, you're not going to get a lot of that volatility that a lot of market makers make in the market whenever they want to liquidate people at the tops and bottoms of moves. So something that I would say a lot of people don't know is that this move right here, right, the top and the bottom of a lot of these positions is actually the most volatile time in the market. So if I would show you right here, this little candle right at the bottom of this move, this candle moved 6% in one candle in order to form the bottom. So it's extremely risky to find the bottom of these moves. Whereas if I would have shown, for example, the candle on this breakout or the candle on this uptrend, this candle right here, right before the breakout, assuming I would have entered here, is a 1% move candle. In 4 hours, Bitcoin moved 1%. So say the trade doesn't go in my favor, then it's only going to go down like what, 3% at most? You know, there's not a huge level of risk there. But if you are trying to predict tops and bottoms, then that is much, much riskier. Something else trend trading teaches you is it also teaches you to have a system. As I was explaining in this video, this is just my personal reasoning to trend trading and how I enter trades. However, once you try trend trading, once you have, okay, I want to enter a trade, every single time there's an uptrend, every single time there's a continuation, then it forces you to have a system of checks and different things that you look at before entering in a trade. And that's one of the most key things you're going to have in order to become a consistent trader. Anyways, guys, thank you guys so much for watching this video. Hopefully this has now explained to you how to trend trade, how to become a better trader, and how to progress in becoming a profitable trader. Thank you guys so much for watching this video, and see you in the next one.